Good evening, people. Welcome back. So we've had a green day. So green light to everything, full steam ahead into the bull market, right? Well, maybe not so much. We've had that crypto bounce, but I'm going to show you that we've got some good news that's helping give us a little wind in our sails to move forward in the bull market. And we've got some new resistance and support lines since the big flash crash of yesterday. But after we already had pretty much a solid week of slowly drifting down in all the major crypto markets, and then yesterday's breathtaking flash crash, we can't just say, oh, it's a one-day thing and we're off to the races again. It's probably going to take a while. We're going to have to create some new support lines, bounce around a little bit before we move up, but I still believe we are in a bull market. So first off, let's go into some news. Something I talked about on yesterday's episode has kind of been shown to be proven right. Big shout out to George from Cryptos Are Us. He was able to show some data that he'd pulled from, I don't remember where now, but it was very, very telling that not only Bitcoin, Ethereum, and most of the other big cryptocurrencies had a massive influx of coins onto the exchanges right before the crash. And then exactly the same amount of volume of crypto came right back off the market after they rebought at the lows. So here's a story from Cointelegraph that also tells us that same thing. So a Bitcoin whale who sold at $58,000, so probably less than a week ago, reaccumulated at the bottom and went from having 3,000 Bitcoin to having 3,521. So he just coincidentally decided he wanted nothing to do with Bitcoin, sold everything he had, only to buy right back in at the dip. Now, I don't know if you watched other YouTube channels where they've pulled out these kind of anonymous message boards where I guess all of this was forewarned. An anonymous source was saying that the Chinese government and some big financial institutions had gotten together and decided that China would put out that FUD story about how they're outlawing cryptocurrency. That would be the bad news catalyst, and all these big whales would pile on with sell orders to push it down and everybody be able to point at the Chinese news, which really wasn't news. As I mentioned yesterday, they've been saying that their citizens can't be in Bitcoin for years. I think since back in 2013, they've been saying that. So that really wasn't news, but they needed a catalyst, something to point to so they could justify why the stock market dropped from $42,000 the night before to 29,900 by 9 o'clock the next morning. So all of that has already been discussed on many other YouTube channels. Go back and check out George from Cryptos Are Us. I'll give him most of the credit. Also, BitBoy Crypto has been talking about it as well. All the big channels have been talking about it, so I don't want to rehash that. But this is just a news story on Cointelegraph showing an actual example of somebody who coincidentally sold out of everything only to buy right back in at the lows, and in essence go from 3,000 Bitcoin to 3,500 Bitcoin just because of getting out at the right time and getting back in at the right time. Suspicious? I think so. But you can read this article at your leisure. I want to go on to the next article, which shows that it's exactly what I said on last night's episode, that you can't let the FUD and the whales manipulating the market scare you out. So what they're saying in this article is that exchange flows on chain data show that retail traders fueled Bitcoin sell-off. In other words, lots of wallets with little amounts of Bitcoin were the ones doing the bulk of the selling during the flash crash. Some of that is probably, like I said yesterday, a lot of these people were probably leveraged. So it wasn't like they chose to sell. I mean, who's up at 7 in the middle of the night selling off and then selling off until 9:05 in the morning, unless once that crescendo of selling happened, all these exchanges like Binance and KuCoin and all these other places were forced to sell you out because the price of the Bitcoin or whichever one you've leveraged had fallen below a threshold where they just said, sorry, we got to liquidate you, and people lost everything. But anyways, if you go through this article, it'll say that it was mostly small investors. And down here, this Gradwell, who's been quoted here, says, winter is not coming yet. A rising popularity of cryptocurrencies in 2021 has brought a large number of new entrants into the market who have bought large amounts of cryptocurrency, raising the stakes for the market as a whole and increasing the overall market capitalization. According to Gradwell, retail is selling on exchanges while institutional investors are simply not buying as much as before. So that's what they're saying the net effect is that it fell, was because institutions just kind of bought small and small investors were selling big. So the retail dump while the whales accumulate, similar to the last story. A chart on here talking about how Bitcoin inflows to exchanges are currently low compared to past major falls. So in other words, usually there is a influx of coins coming onto the market because all these big institutions and whales generally, because they have hundreds of millions or at least millions of dollars worth of cryptocurrency, and they don't want to just leave it on Binance or leave it on Canada's Newton, who's not very dependable lately. They aren't going to leave it on an exchange on the risk it might get hacked. So they all take it and put it on a cold wallet or somewhere much safer offline so it can't be hacked. But when they want to sell, when the big boys all talk behind closed doors about how they're all going to sell on the same day, well, obviously the day before, or maybe a couple of days before, they start putting all their Bitcoin back on exchanges so they can hit the sell button. And so when you see inflows onto the exchanges in record numbers like we saw right before the crash, then usually you know there's something afoot. There's definitely something coming, and it's usually not good. And vice versa, when you see a lot of coins going off the exchanges, probably to cold wallets, then that usually means that they are planning to hodl for a while, which is bullish. So yeah, keep that in mind. And this is just quoting again. This suggests that much of the selling is for people with assets already on exchanges who tend to be retail investors. Just like I said, retail investors, I'm the same way. I like to get yield from yield farms. I like to do stuff. So a lot of my coins are on various exchanges and various DEX, and therefore it's not in my cold wallet. So they can tell if everybody's pulling it into their cold wallet that that's most likely whales who are just hodling for a while. So there we go. Nothing that should shock us. We talked about this yesterday. Everything indicated that it was the whales who some had grouped together and discussed mass selling all on the same day, overnight, when there weren't a lot of people to buy the dip. And it worked. And it spooked a lot of small investors to get out. And it also force sold a lot of leveraged people. So don't leverage. Do not buy cryptocurrencies on leverage. They're already volatile enough. Again, I equate it to playing hot potato with a live hand grenade. It's eventually going to go off. And the last story that is super bullish in my mind is the Fed is already having open discussions about creating their own CBDC, which is central bank digital currency, similar to what China's already done with the digital yuan. The Federal Reserve, Jerome Powell in this story is being quoted as saying that they're actively looking into creating a CBDC. So there was another article that I didn't pull up too, where they're talking about making sure that there's good regulations to collect taxes on cryptocurrencies. So if the government's talking about making sure that they're getting their fair share of taxes and they're thinking of getting their own central bank digital currency, then you know cryptocurrencies are going to stay forever. Because once the government gets involved with their own coin, they can't say every other coin's illegal except for ours. I mean, this isn't China. People in the United States and Canada and the Western world wouldn't stand for that kind of autocratic decision making. So this is good because that little 1% chance that people would say of how do you know the U.S. isn't going to outlaw it, or Canada or whatever Western country. I always used to say no chance, especially in Canada where I live, because they've already allowed more than one ETF to be on the stock exchange. We've got Bitcoin ETFs, we've got Ethereum ETFs. There's going to be more ETFs to go over Cardano and Polkadot and everything else soon enough. The US is already talking about very soon having their own ETFs. And once that happens, it's going to be the floodgates of volume into cryptocurrencies because Canada's 1/10 of the population of the United States. So when we have ETFs, it doesn't exactly move the needle, but when the US does, it does. So that's a good sign that the government is already talking about getting their own central bank digital currency. He says, our focus on whether and how a CBDC could improve an already safe, effective, dynamic, and efficient U.S. domestic payment system. When he says domestic payment system, think stimulus checks. I've already talked about this in previous episodes. If you watch the channel for a while, you know I've already mentioned this. I'm almost 100% sure, well, I called it the Fed coin. This is being called a CBDC, that the government was going to come out with a Fed coin. And in the future, they're going to say dangle that carrot. Oh, you want the stimulus check that we're going to give you free money? Well, you have to open a crypto wallet or a digital wallet, and we're going to deposit our Fed bucks into your wallet. But it could be a smart contract one where they say, oh, but it's only can be spent at these authorized retailers, like maybe restaurants, but grocery stores, Walmart, Costco, places where they know that they're giving you a stimulus check. It's not going into booze and cigarettes, or it's not going into illegal drugs. It's going to food, or it's going to clothing, or it's going to something worthwhile for the stimulus check. And they can even, in these smart contracts, put a time stamp on these to say, we're giving you this free money, but you can't put it in an investment account, or you can't do this, or you can't do that. It's only good to be spent at those authorized retailers by a certain date. And if you don't spend it by that date, the coins become obsolete. I mean, think of it from the government standpoint. We now can make sure that the stimulus checks go to what we want it to. We can also track where people are spending their money and on what. And we also get because you're going to give the government your electronic wallet number, they're going to be able to know who has what wallet. So it's the perfect thing for the US government to have. It just makes perfect sense for them because they can track everything, and they love to know what everybody's doing with the money, especially if they've given it to them. So this is, in my mind, a done deal. This is coming. And that's, again, very bullish for the cryptocurrency ecosystem in general. It doesn't matter about which coin. It just means they're not going to outlaw it. I never thought they would, but this is kind of like, yep, this is the green light for sure that they're not going to outlaw it. So those are the three stories I wanted to mention that is very bullish. So we can, a little sigh of relief on at least some good news, because there was so much negative FUD in the mass media for the last, 2 weeks. It felt like every day mass media was coming out with some negative story. So at least some good stories on this green day. So let's show the green day that we're talking about. Crypto market cap. Let's just look at, this is the top 100 by market cap. And let's make sure that this is refreshed. And then we're going to just see, it is a beautiful day where everything in the 24-hour thing, everything is green. Let's find one red. Oh, well, it's not even really a red. It's a tethered coin. BUSD is Binance's tethered coin. So as you can see from the graph here, it usually just goes sideways. So that doesn't count. DAI is also a tethered coin. It doesn't count. Luna is not a tethered coin, but it is the maker of a tethered coin. Don't ask me why they're down 4%. Shiba Inu, let's just hope that thing just croaks already. It really makes cryptocurrencies look foolish in my mind. It is absolutely, it's almost like Dogecoin times 10. Dogecoin was already a meme coin, but with Elon and all these bigger characters deciding that's the new currency to use as a store of value. After it gets past a certain market cap, it's up here at what? So there's Dogecoin at number 7 with a market cap of $52 billion for a meme coin. That's already embarrassing enough for the cryptocurrency world. But Shiba Inu was actually a coin that just said, oh, Doge got away with making a dog coin. We're going to do the same thing. And it will kill me if this thing all of a sudden rockets up into the top 10, just like Dogecoin. So please, for the love of God, don't make us look foolish and let that thing go up. But that one's down. PancakeSwap is down. Now, I noticed PancakeSwap, and I saw another one, ApeSwap. They're on the Binance Smart Chain. They're probably down in sympathy with Pancake Bunny. And I know what you're thinking. Who comes up with these fruity names? It's hilarious. Pancake Bunny, which has a little bunny symbol. This one's PancakeSwap. Obviously, Pancake Bunny was meant to be just like PancakeSwap. It's kind of sad that when one, I'll call it a company comes out with a cryptocurrency with a purpose and it gets popular, like PancakeSwap is the number one swap site and yield farm site and pool site on the Binance Smart Chain, and dwarfs Uniswap, which is Ethereum's swap contract play in volume, because Binance has such low fees versus Ethereum. But anyways, of course, you're going to get copycats. You got ApeSwap and you got Bakery Swap. You got all these other swaps. But anyway, one of them was Pancake Bunny, and I guess it got hacked for $200 million. So they've made statements that they're going to make good on all the customers, that nobody's lost money. But I mean, if PancakeSwap lost $200 million, I'd be like, no sweat. They're so profitable. They could just pay people out of their gross profits. Pancake Bunny, which I don't even know, it's way down the list. It'll take too long to find it. It's much smaller. So a $200 million hack is big for a small company like that. So anyways, when a DEX like that on a Binance Smart Chain gets hacked, it's like every other one that's also on the Binance Smart Chain goes, oh geez, like everybody's like, oh, maybe I shouldn't own that coin, or maybe I shouldn't swap on that site. But it'll blow over. It's just a couple of days, especially if Pancake Bunny pays everybody back. So as you can see, green all the way down the thing, and some really big numbers. If I hit the top in the last 24 hours, top percent gain, Internet Computer. I mean, this one just went on the market like a week and a bit ago, and it's already got a $20 billion market cap. It's insane that this one's already number 9 and it just started. But yeah, we can all look at how great the 24-hour is, right? But then you look over at the 7-day and go, ooh, down 46%. It's just kind of fun to do, just to see how much we've snapped back. Yeah, anyways, you can see some really big numbers here from top to bottom. But if you want to go the other way too, you can go on the 7-day and say, what's the worst? Well, Shiba Inu, woo! Hate to say it, but that one going down 53% kind of makes me smile a bit. Internet Computer, we just talked about, big day today up, but it was a big, as you can see from the 7-day graph, a big down day. So yeah, tough week for us all, tough week. But as you can see, the last 24 hours are bright. So let's get on to the charts here. Last thing we want to do is, okay, always we're going to start with this, the big picture. This is the one I always show you on the bull market and how we expect it to continue. And this is the weekly candle for Bitcoin. And I think we got 3 more days before this candle ends and we start a new candle. So wouldn't it be sweet? I mean, we've already gone from down here at 29,848. We're already back up to 40,380, and we were higher than that earlier today. But if we could end this weekly candle with a little green on the top instead of red, that would be sweet and would be very bullish. But even if it's red, but just a tiny candle of red with a really long wick, which is obviously going to have a really long wick no matter what, that's also sort of bullish because it shows there was that flash crash, but we've mostly recovered back to the top of the candle. So that's good. So in my opinion, we're still, once we recover, we're going to follow this kind of like, well, like it's funny how the dotted line looks exactly like it. This dotted line goes almost like rocket ships up. And that's something, not immediately, I don't think tomorrow or the next day, but, after things calm down, especially if we get a few more positive stories in the news, I think we're off to the races again. And we're still going to hit the, $250,000 to $300,000 range on Bitcoin. And as I've said in previous episodes, Bitcoin is the tide that lifts all boats. If it's going up, most everything else will be going up at the same time. So that's Bitcoin. So let's go into the other ones. Bitcoin on a 4-hour. Oh yeah, I want to show you 4 hours on every one of the coins that I think are interesting to most people. Of course, Bitcoin, I've taken them all on a 4-hour chart. You're going to see they all look similar. And I've done a Fibonacci retracement, which is funny. When we were in the bull phase a week and a half ago, we were using Fibonacci to say, well, we know it's going to break this upper limit at some point. And then let's look at the Fibonacci extension to see how high it's going to go before the next resistance. We're all thinking it's automatically going to go higher. Now we're all looking at it like, ooh, where's some support here? So I put a red line at every support line that it's just barely above to say a number for you to remember of where it should stay. So with Bitcoin, this is the 50% retracement from this way back here starting point. Now, I know some people might say, well, you're supposed to start from the most obvious bull run, but there isn't really lately an obvious bull run. I mean, you could have started here, but I've decided just to start back here, and I've done that on all the charts so that I'm comparing apples to apples. But as you can see, the wick went all the way down and touched the 618 retracement, just kissed it, and then went back up and is now bullishly been solidly for the last number of 4-hour time frames above the 50% one. So I think we got to hold on to this 37, let's just say 37,000 to remain in the bullish phase. And the next upward resistance will be at the 38% retracement line, which is about 43,753 to be exact. So that's Bitcoin. Let's go on to, again, looking at the same exact Fibonacci on a 4-hour. Look how bullish Cardano is. I've been saying this for a bunch of episodes. Cardano has just been smoking it, even in this terrible pullback. Look at this wick. It went all the way down to $1, which was actually the 618 retracement point, and just, again, kissed it and took off to the upside again. I wish, killing myself for this. I had before this crash, I actually had a limit order in at, I think, 144. And I pulled it overnight thinking, well, I'll look at it again tomorrow. I mean, it had been drifting down a bit. And then I was thinking, I think it was around here when I put the thing in. Then I thought, I don't want to sleep. I took it off. and then at first I was like, oh, thank God I took it off, because it went all the way down to $1. And I was like, ooh, I would have gotten in at $1.44, and I would have been 40 cents to the negative already. But I mean, it didn't stay down there for 5, 10, 15 minutes, and then it was back up again. And now it's up at $1.82. So I would have been almost 40 cents to the upside had I just left that limit order in there. But as you can see, while Bitcoin right here was touched the 618 and stayed above the 50%, ADA, or Cardano, is above the 38%. And like literally a third of the way to its all-time high. That's very, very bullish. So if Bitcoin continues to move up, everything else will continue to move up as well. So the next one that I have a large chunk of money in, and it's not looking as bullish as Cardano, is Binance Coin. Same thing. I started from way back here with the Fibonacci retracements. And again, like the other ones, its wick from that flash crash went down and touched this 618. This other line down here I left in. It wasn't on the last one. That's the 786. But we're not down there. Nothing's touched there. So it touched the 618. It's now above the 50%. So we need to stay above that 50%. That's hopefully the support of $362, let's say $363. And the next resistance for the 38% will be around $440. So we might get a little resistance up there. Also, as you can see, that 435 area was once a support before. So what was support will often become resistance. So we might have a little trouble around the 435, 440 area. If we get through that, then we're all the way up to 550. So for me, because I have a large chunk of a lot of my yield farm stuff, you need 2 coins, and I'm yield farming coin whatever with Binance. And then another yield farm, coin whatever with Binance. So every time I'm yield farming and I've got Binance as half the equation, it adds up to a lot of Binance. So I really would like to have Binance go up more than most of these other coins that I do own but don't own in that volume. The next one is Cake. Again, before all of this meltdown, Cake was just super bullish. It was taking off. It was beating Binance. It was beating Ethereum. It was beating everybody. And I got in somewhere back here. And so I'm way up on my Cake coins. But yeah, then it started to just melt and melt and melt and melt. And I thought, you know what, that's fine. It's going to get down here to the 38% retracement, and then it'll take off. It'll get support and it'll take off until then, of course, the Elon Musk tweets and then the flash crash. And it got way down. It went down below, even with the wicks, below the 618 retracement. So the only next one, which isn't even on here, would be the 786, which would be down here somewhere. I don't want it to get that low. But right now it's come back up like most of the coins, and it's gone above this 618, but it's not gone up as much as a lot of the other coins. So it's still not looking very bullish. Yeah. I wouldn't be buying this coin right now. Like I said, it's probably gone down a bit today on the whole Pancake Bunny fiasco that's hurting all of the Binance Smart Chain dexes. Next one is Polkadot. Polkadot didn't actually get hurt as bad as a lot of the other coins, as you can see, during the flash crash. It was already way up here, far above its 38% retracement. And it went down. Its wicks went, its wicks went pretty deep. Its wicks went all the way down to 1792, which was below the 618 retracement. But more importantly, it's gone right back up. It's now above the 50% retracement. So I threw that red line on there so you can see the price. It's at 27 $11. Oh yeah, this one. Woo. ADA was definitely looking bullish, and this is the only one that I I also wanted to get into this one and never got an opportunity and didn't have any limit orders or dry powder when the slash crash happened to get into this, unfortunately. But if you are into Polygon, which has the symbol MATIC, congratulations, you're doing quite well and is looking very bullish. Even during the flash crash, I guess it did go down and touch the 618 retracement with its candle, but as you can tell, instantly shot back up and is now above the 38% retracement. So as long as it stays above that, which is $1.69, let's say, then your next resistance would be at the old high, which is around $2.70. So yeah, envious of anybody who has MATIC, but it is definitely, of all the ones I'm following, the most bullish. Another one that is flip of that, not looking so bullish, is VeChain. Again, its wick went almost down to the zero line. Not quite. It definitely looks like it went past the 786. So that is definitely not bullish. It is very bearish. And it's only bounced back to just barely, actually, it might almost be going back underneath the 618. So if it breaks below the 618 and it's already had a wick that almost went down to zero, I mean, the best case scenario is it stops at the 786. Yeah, I own this too, so I feel your pain if you own it. But VeChain is not looking too good. And I haven't seen any news, unlike, the Pancake Bunny fiasco. I haven't seen any news that would tell me why VeChain isn't snapping back like a lot of the other cryptocurrencies are. And the last one, which I don't have pre-done on here, but I'll pull it up, is Ethereum. Okay, looking at Ethereum on the 4-hour chart, similar thing. I took the Fibonacci way back here to where it sort of felt like it was starting a brand new bull market. So anyways, its wick went down just underneath the 618 retracement, but it's nicely snapped back. It's now above the 50%. It's almost crossed above the 38%. So again, let me just throw on a red line here. So it's got to stay above, of course, the 2454 level. That's the 50% retracement, which should be support. And it would be even better if it broke above this 38%, which is around $2,900. If so, next stop is right back to the old highs of 43, let's say 43.80, somewhere in there, 43.85. So I don't own any Ethereum. I've mentioned this in previous episodes. I totally get Ethereum's value to people because of its first mover advantage. It was the first and the biggest of the smart contract ecosystems, and a lot of new cryptocurrency projects jumped on and became part of the Ethereum network. So it's got that first mover advantage. But the way it is now, with the insanely high gas fees to do anything on the Ethereum network, just makes me go, it's not the best in class right now. Now, maybe when Ethereum 2.0 comes out, things will change. But I can't invest in a I call it a company, sort of. I can't invest in a project that clearly is being outmatched by Binance, for example. Cardano is about to come out with its smart contracts by August. Well, they already got the testnet supposedly starting very soon on it, and it'll be full-fledged release supposedly around August. And then there's already a line of new projects that want to go on Cardano because Cardano is selling itself as being very, very inexpensive to operate on. The gas fees are going to be microscopically small, even less than Binance. And then there's also Solana, which has the most transactions per second. I think it's 69,000 transactions per second, and a microscopically, like the smallest of the entire crypto industry, gas fees. So when those are online, Ethereum's going to have to compete with Binance, which is already huge. Cardano, a lot of, even VeChain has their own smart contracts now, Solana, so many, more than I can mention. So there's just so much competition that to me, it's like buying, well, it would be like buying MySpace when Facebook is just coming up. I mean, MySpace and Facebook, you know what happened. Facebook ended up taking over all the market share, and now MySpace doesn't even exist anymore. So yeah, not to say Ethereum won't exist, but Ethereum's got to get their act together with the gas fee problem and the congestion. And the problem is that with their architecture, as I told you, Solana has, I believe, 69,000 transactions per second, which means it's very, very efficient. Therefore, they don't charge a lot of gas fees. I think Ethereum's like right now, it's like 55 transactions per second. 55 versus 69,000. I mean, it's like a horse and buggy versus a race car. So yeah, I know there's so many people out there that just love Ethereum, but until I see Ethereum 2.0, I won't be buying any of those coins. So there you go. We've had the crypto bounce, which makes us all feel a lot better, but we've got some resistance points. Most of them are at the just above the 50% retracement from their all-time highs, and now they're going to be hitting their head on the 38% retracement, which will now be resistance. So we got some work. It's not going to be a V. We're not going right back to all-time highs in the next short while. I think we got some work to do. We're going to bounce off those resistance levels a few times before we finally get back to all-time highs. But I think we're going to get there, and I think by end of June, we'll probably be getting close to all-time highs, maybe into July. But we got time. This bull market is not close to ending. In fact, I've heard more and more people saying that this bull market should go even a little longer than we've forecasted in this box, which kind of implies that it's going to be August. If I go right to the line, August 22nd, as if I know exactly that's the end of the bull market. This is just basing it on the previous two bull markets and the length that they lasted. But obviously, if this is a super bull market, it can last longer and go higher than the previous ones. So let's look forward to that, right? So if you've enjoyed this episode, show the channel some love by giving it a thumbs up. Also subscribe. Let me just show you my subscriber count now. We are presently at 837 subscribers. Woo! I got to get to 1,000. That's the goal. So if you haven't already subscribed and you've been watching some of my episodes, don't just show the channel some love with a thumbs up. That's always helpful. But what would be more helpful is if you hit the subscribe button, and I would muchly appreciate it. So until next time, this is Craig signing off, wishing you happiness, health, and wealth in that order. Ciao for now.